Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, April the 19th. The year's 2021. Let's talk trading. Taking a win versus winning. Last week, we talked about taking a loss versus losing. And just like last week, these videos for educational purposes only. Your results may differ from mine. So, taking a win versus winning. There was a Livermore quote that I'll have to paraphrase because I haven't dug it out, but it basically said the mistake he made was taking a $2,000 win when he could have, had he waited, could have had 20,000. And that probably, if you think about it, it gets into the money management and the brain management. Um, One of the things about winning and taking a win is you have to have some brain management, because when you're up a few pips, you might get some FOLO, fear of losing out, and you don't want that to happen. And then what'll happen is you'll take that small win and then you'll regret, and you'll go in the rogo, the regret of getting out. And then the next time, those two might cause you to FOMO, which is fear of missing out. So you jump into a trade, and then what'll happen is you wish you hadn't have done that, so you'll take another loss, and then you'll have the robs, regret of being stupid. So you can see how once you get caught in this, it's a downward spiral. So you have to overcome that. And then on the money management side, you have to have a plan, and you follow that plan. And all you then evaluate is, did you follow the plan or did you not follow a plan? You don't worry about how much you made, how much you could have made. You just follow the plan. And that might be the biggest key, because something as simple as the wall mall trade, there's still traders that are having slight difficulties with it. um, right here, and I waited, I wanted to get near the top of the hour here. So we're in the first 5 minutes of trading, so we haven't hit one of these wall mall lines. And so what does it say? If we have a green candle and we hit 80, we need to go long. If we have a red candle and we hit 70, we need to go short. That's it. I don't know if that trade will be a winner or a loser. I don't. We'll just have to see what happens. That's all we can do. So will it be a winner? Will it be a loser? Don't know. Can just put the trade on. So the thing about, taking a win versus winning, see, we don't know if this is going to, if say a trigger is short, we don't know if it's going to go down to 69 or 59 or somewhere between or somewhere beyond. We have no idea. And so you have to take the trade. Now, once you're in the trade, you then have to have your money management. So if you take 5 pips off the table, that's what your target is. That's what it is. And if you wind up leaving 50 on the table, it doesn't matter, because you had a plan to make 5 pips. Now, that might sound counterintuitive to what I said earlier about what Livermore was saying, but I think even he would say, well, you have to follow your plan. Now, if you're going to do seat of the pants trading, in other words, you're just going to react to what the market's doing versus having a preset plan, that's different. And sometimes you do have to make adjustments on the fly. And as Walmart would say, that comes with seat time. But in the beginning, you have to have that definite plan. So, if you have, say, maybe a 5 pip plan in place because you want to make 10 a day, so you figure if you can get it on 2 trades, you're happy, or maybe you only make 5 pips a day. Doesn't matter. What matters is that you have a plan and you follow it to the T. You execute it. And then over time, those small wins add up. You know, as I like to tease Walmart, I said he's stacking bricks, stacking pips. You know, a pip here, a couple pips there. You know, but sometimes, you know, if you're taking 20, 30, 40 trades a day and you're making a pip, you know, a trade or better, you can see you're making 20 or 40 pips a day. And I think most traders would be happy with those returns. And that's just what you have to do to focus on, you know, on winning. And winning meaning at the end of your session, you're ahead. You know, you can win on any one particular trade, but you can give it back on the next. What we're looking for is that steady progress where your account is increasing. You know, Walmart even has it. He wants to finish each hour positive. So he's added another criteria for his trading. And sometimes he has to fight back. I think today he had a couple losses in a row, and I think he was between the two trades. He was down either 3 or 4 pips. He made it up on the next trade. That's because he takes his signals. He doesn't second guess it. He just takes it because over the long haul, he knows what the payout is. And speaking of that, yesterday I had the frequency distribution, the hour, day that the range occurs. And so right now we're on Monday, and you can see we're at the 19th hour. And so for Monday, we have 7 times it was better than 13 pips versus 1 time when it wasn't. It was below once, above 7. So you can see it pays to take this trade. Now, we've got the day filter on, and what happened was I had a small bug in the computer. It took me a long time in the program. It took me a long time to find it. So if I turn around and set this to false, this will be for every day for this hour. And what you can see here is you got 33 times above versus 11 below. So that's basically 3 out of 4 times. It's going to be bigger than 13 pips. That's what we have it set for. And you can see here the minimum is 11 pips during this. Computer just froze for a second. Something's weird. What? Is this still recording? Because the time had stopped. Okay. During the 19 hour, the smallest was 8.6 range, high minus low. Average is 20, and the largest was 81. So you can see here, trading during this hour, it's usually pretty profitable. The day doesn't even really matter. Let's see. So if we put the day filter back on, and you know, I think I'm going to have to make another small change to the program because I don't like the way these percentages are looking. I think I need to use this number to figure out what the percentages are. But this is, you know, overall for the day. So I just wanted to let the traders know I sent that fix out. So, because the other one was coming up with all zeros. But let's take a look. Let's go back to the charts here and see what's happening. So far for the month, you can see we're in the monthly previous month's wick zone there. Maybe if I expand the chart, you can see a little bit better. On the weekly, we've got all but one gap is filled. You can see on the daily, it broke out of the monthly range huge. It's 142 pips above that. So that was a huge breakout at the 138.35 level. Okay, so we're 335 pips above the yearly open and 199 above the monthly open. Once again, huge breakout here at 38.51, that inside bar on the week. I think I mentioned that in yesterday's video, the Sunday video, weekly open and gap. So anybody taking that paid off. You can see here there's still a lot of inside bar action in the daily, weekly, and monthly across the different pairs. But I think you may have missed it on a few. Range 183 on the pound. You can see we've got a 3 pound pairs over 200 pips. So I guess there was news about the over there in Great Britain that they were going to, I guess the vaccine, COVID vaccine, was going to was working or something, and they were going to ease the restrictions on their lockdowns. So wait, that's what may have moved the market this way. Buy zone, once again, we missed a pivot today. There was that clear signal. That was even yesterday, and you can see what's happened since then. Rats, today, if you were a red rat, I hope you were taking profits quickly, because this was one of those runaway freight train kind of days. You can see that with these H4 candles, it's huge. Once again, we missed that daily pivot, and we haven't hit the weekly pivot either. But we almost hit R3 on the daily. We went to the weekly R2. Price is just taken off. So we took out a pivot here that had been missed a few days ago. So we still have a missed pivot from last month right there at 40, call it 40.18. We'll see if that pivot gets taken out. Let's see, that was on the weekly. On the daily, missed that. And then on the monthly, you can see it's been since 2014 that we had a missed pivot. That reminds me, I still got to fix that one little minor bug in that missed pivots indicator. Wick zones, right through the wick zone, since there was really no wick, upper wick zone, it was just the high, because candle closed right on the high, no pullback. We've been through the range fill frequency distribution. So here once again, there was a previous H1 low, price dropped below it, came back above it, might touch it again, 75 psycho line. So if, say, you're a psychological line trader, 00, 25, 50, 75, you have to take the trade. It might go against you. It might go your way. You don't know. But if that's your trade, you take it. So here to 75, if you took it, could have picked up a couple pips, going the other way a couple pips. And right now, if it were to hit it, you have to take the trade. Some are going to win, some are going to lose. But the only way to get that big win, you know, it's like the lotto. You got to play to win. And it's the same is true in trading. A quick look at the ranges here for the week. We're at the 18 percentile, already better than last week, which was 14. High minus previous high, 154 pips on that breakout. No breakout to the previous low. So, fellow traders, I'm sure Wall will join me later in the week, and we'll talk more about winning, or taking a win versus winning. So, remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.